Howdy, everybody. Welcome to Liberty Call. Today is Thursday, February 20th, 2025. Hope you're having a fantastical day out there in the interwebs. It's kind of overcast here in my part of Colorado. We have a storm coming through today, which awesome. I have a sinus is like a barometer, and anytime the pressure drops, right here, it feels like there's a drill going right into my skull. So started last night and took some ibuprofen before I went to bed. Still had a headache when I woke up. Took some more, and I'll probably be taking a little more here as soon as I finish up. So, anyways, we got some snow on the way, about 2 to 4 inches, and then it should be heading out by tomorrow afternoon. So, anyways, let's hope that the high pressure comes back because, again, my brain feels like it's going to pop out of my head. So, all right. Well, markets are tumbling as Walmart's weak profit forecast and Trump's renewed tariff threats shake investor confidence. The Dow is down over 600 points, with the S&P 500 and NASDAQ following suit. Walmart's stock is sinking 6.4%, dragging down the retail sector, while Alibaba is soaring 10% after crushing earnings. Meanwhile, jobless claims are rising, hinting at potential labor market weakness, and Trump is ramping up trade tensions with new tariffs on lumber, autos, semiconductors, and pharmaceuticals. So before we break all this down, I need some help from you. If you could give me some thumbs up, a like, a share, a subscribe, a follow, and press the notification bell. All righty. Let's hop into the markets. Dow Jones was down 1.01%, 450 points. Looks like it came back a little bit before the close. Closed at 44,176. S&P 500 down 0.43%, 26 points. Closed at 61,17. NASDAQ down 0.47%. 93 points, closed at 19,962. The VIX was up 1.38% today. It's at 1548. Canada down 0.44. Brazil up 0.25%, and Mexico up 0.32%. In Europe, Germany was down 0.41%. The UK down 0.57%. France up 0.15%. Netherlands down 0.39%. Spain up 0.29%. Italy down 0.26%. Switzerland up 0.05%, and Portugal up 0.16%. Russian exchange is green again today. MOEX up 0.68%. RTSI up 2.86%. And the overnight markets, the Nikkei in Japan was down 1.29%. Australia down 1.15%. New Zealand down 1.34%. In China, the Shanghai was down 0.02%. Shenzhen component up 0.2%. China 50 down 0.36%. DJ Shanghai down 0.07%. Hang Seng down 1.6%. And the Taiwan weighted down 0.49%. All righty. Good stuff. All righty, well, let's jump into our market recap. S&P 500 falls as Walmart sales warning fuels consumer and economic concerns. All right, the S&P 500 fell Thursday as a disappointing sales outlook from Walmart raised concerns about the strength of the U.S. consumer and broader economy. Walmart shares dropped 6% after issuing a weaker than expected sales forecast for its 2020 or for its fiscal year. Signaling potential struggles ahead for inflation-weary customers. The retail giant expects annual consolidated net sales to increase between 3% and 4%, between analyst estimates of 4% growth, according to LSEG data cited by Reuters. As one of the largest U.S. retailers, Walmart serves as an economic bellwether, making its guidance particularly influential. The weaker forecast rippled across the retail sector, with Target and Costco also trading lower. Despite the gloomy outlook, Truist Securities called Walmart's pullback a buying opportunity, citing its market share gains and improving profit margins. On the earnings front, Alibaba saw a 7% jump in its U.S. listed shares after reporting better than expected quarterly revenue, buoyed by strong demand in its China e-commerce sector. Meanwhile, Carvana plunged 15% as investors worried about the lack of clarity on its 2025 outlook. Despite strong Q4 sales, Birkenstock fell 2% after leaving its annual margin forecast unchanged despite a sales boost from the holiday season. All right, and finishing up here, Federal Reserve officials continue to emphasize patience in monetary policy. St. Louis Fed President Alberto Musalem reiterated that while inflation is moving towards the Fed's 2% target, actually it's going in the other direction, rate cuts should remain on hold until further progress is evident. Atlanta Fed President Raphael Bostic was slightly more dovish, forecasting 2 rate cuts this year. We'll get to that in a minute, but noted that uncertainty surrounding inflation remains high. All right, we'll get to Mr. Bostic's comments in 2 articles. All right, next up, let's get into some labor data. U.S. labor market stable, hit from federal government belt tightening awaited. All righty, U.S. jobless claims rose slightly, but federal layoffs yet to show impact. New unemployment claims in the U.S. rose by 5,000 to 219,000 last week, suggesting the labor market remains stable despite recent federal job cuts under the Trump administration. The increase was slightly above economists' expectations of 215, but the jobless claims continue to fluctuate between 203 and 223 this year. While thousands of federal employees, from scientists to park rangers, have been laid off by Trump's Department of Government Efficiency, the impact has yet to appear in national employment data. Experts believe the spillover into the private sector will take time as workers on government contracts start losing jobs. Trump's administration aims to cut the 2.3 million strong federal workforce, excluding military and postal workers, arguing that it is too bloated. I would agree. The reductions could have significant economic ripples, particularly in Washington, D.C., Virginia, Maryland, California, and Texas, where large numbers of federal employees reside. Yes, I knew. I grew up around them. Despite the slight rise in unemployment claims, financial markets remained relatively unaffected. Stocks dipped, the dollar weakened, and Treasury yields fell. The Federal Reserve is closely monitoring the economic impact of these policy changes, while the Fed kept interest rates unchanged. In January, concerns over high inflation persist, especially with new tax cuts and mass deportations on the table. Although non-farm payrolls rose by 143,000 in January, economists expect job growth to slow sharply in the second half of this year, especially as government hiring, a major employment driver, declines. Well, government work is not real work. It's I call it daycare half the time, but unless you're actually providing a good or a service to the public and you're doing it without the government funding it, it's not really a job. I mean, it's employment, but it doesn't really help the greater public. All right, next up, we'll get to Mr. Bostic's comments here. Fed's Bostic sees two cuts in 2025 amid an uncertain outlook. All right, Federal Reserve Bank of Atlanta President Raphael Bostic expects the central bank to cut interest rates twice this year, but warns that high uncertainty around government policy could shift this outlook. Speaking to reporters on Thursday, Bostic noted that changes in trade, immigration, energy, and fiscal policy under the Trump administration could significantly impact economic conditions. He emphasized that his forecast could change in the next 6 months as more clarity emerges. The Fed kept interest rates steady last month after cutting rates by a full percentage point last year. While policymakers want inflation to decline further before additional cuts, Bostic believes there is still room to lower rates without overheating the economy. Really? Seems pretty warm to me. He estimates the neutral rate between 3 and 3.5 compared to the current 4.25 to 4.5 range. Although inflation has eased from its 2022 peak, Bostic still sees it as the biggest risk, while he remains confident that the inflation will return to the Fed's 2% target. He acknowledges potential disruptions from tariffs and mass deportations. Businesses in his district fear rising costs from tariffs, though many believe they can pass the costs on to consumers. Additionally, mass deportations could shrink the labor supply, particularly in construction and hospitality, potentially causing unpredictable disruptions. Actually, that'd be good for those in those industries because they get higher wages. And then finally, Chicago Fed President Austin Goolsbee, or as I call him, Mr. Foolsby, because he's a putz, echoed similar concerns, noting that while the economy looked strong before Trump's policies, new uncertainties around tariffs, taxes, and immigration could complicate the Fed's path forward. If you say so. All right. And I got one more article here. This is from Yahoo Finance. CEO confidence hits a 3-year high amid optimism on labor market and the economy. Different view of things. CEO confidence in the U.S. economy surged to its highest level in 3 years, according to the Conference Board's latest survey released Thursday. The CEO confidence index jumped 9 points in Q1, reaching a reading of 60, indicating a shift from cautious optimism to confident optimism among business leaders. The survey conducted between January 27th and February 10th with responses from 134 U.S. CEOs revealed that executives feel significantly more optimistic about both current and future economic conditions. 44% of CEOs reported that economic conditions have improved over the past 6 months, up from just 20% last quarter. Even more telling, 56% expect further improvements in the next 6 months, a sharp rise from 33% previously. On the labor front, 73% of CEOs plan to maintain or expand their workforce this year. However, hiring intentions softened, with only 32% planning workforce expansion, down from 40% last quarter, while 41% expect no changes. Labor shortages are easing, with more CEOs reporting fewer hiring difficulties. CEOs reported less concern over cyber threats, regulatory uncertainty, and supply chain disruptions. However, geopolitical instability remains a growing concern, with 55% identifying it as a high impact risk, up from 52% last quarter. Despite strong business confidence, consumer sentiment remains weak, with the University of Michigan's consumer survey hitting a 7-month low due to inflation concerns. The Conference Board's consumer confidence report for February is due on the 25th, which is next week. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help. All right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.